recording. Bang. We're going to get ourselves a new session and we'll start from here. I want to start with a little bit of a Q&A first. I know you guys had a ton of good questions earlier. So I want to go over those first because I feel like it'll help you guys while we're going through this backtesting section. Give you guys a little better of a view of at least what I look for. Again, I do okay for myself. I don't know everything. I make a lot of mistakes trading, but I make money every month. So if that's something you want to do, this may help. So Q&A session with the family. Let's do a 150K account. Let's do NQ. And let's start. I was thinking like a couple years back. Let's do like 2021 till just the June of 2020. Uh, let's do the June of 2021. I feel like that would be good. Um, Ba boom. So, okay, couple things real quick. This is FX replay. This is what I use to trade or do my back testing on all the time. Um, I think it's great. It's been freaking wonderful for me. I use it a good amount. I use it a good solid amount. So I recommend it. I'm not plugging shit. I don't have like an affiliate or nothing to it, but it works really, really good. I think there's a free version. I know what I pay for is like 35 bucks a month, so it's pretty damn cheap either way. Um, but yeah, FX Replay is great. So I want to pull up chat. I want to see. Let's see. What's up, dude? I want to see a couple of the questions you guys had. And I want to start from the top because I know a couple of them are about sizing and risk and kind of like where to put stops and take profits type of thing. Um, let's see. Okay, so I'll start with Perrin because I know she started first. Um, okay, about scaling in. So scaling in, I'm not gonna lie, I only do it on options. Main reason being is every time I've ever averaged down just personal, experiences, when I average down on futures, it never goes well. And I just lose more money than I need to. So I don't scale in on losses, but let's see if I can just find a little example, right? So let's say I take, fuck, okay. Let's say I take, just for example, hindsight example, let's say I take longs off this 15-minute IFG and I pop in and I'm targeting these highs, but and then stops at these lows. Let's just say that's the case. What I will do sometimes though is if we inverse that and that was my entry, but then we also inverse this 15-minute, I may add some more once we inverse that and we're doing it with some good speed. I may add a couple, but for the most part, I like to keep things as steady and consistent as I can. I know a lot of people trade off, monetary value. So like, you want to make $1,000 a trade and you're willing to risk 500 or something to trade. So I kind of in the same way in my head. So I usually don't add, I usually don't touch, I usually don't do anything like that. But when I do, that's how I do it. And then another question she had in there was stop loss. So let's say like these are some places I'd want to scale is like there, and then of course this would be the TP, right? Is all the way up top. So if I scaled, let's say here, and let's say I had 10 contracts, if I scaled 5 here, then I would move my stops to break even. So worst case, I took 5 micros at, whatever, 100 points, and then I lose or I break even on the rest, So that's kind of how I go about scaling in, scaling out, all that type of stuff. For the most part, I really just don't do it. But when I do, that's how I manage that. I'm gonna keep scrolling down, and feel free to add them into the chat here. I'll get to them in just a second. Um, Position sizing. All right, so position sizing, and I know someone added to this later with account size as well. So I've seen a few of you guys do this, but you have like a 100K account or a 150K account, and you guys are trading like three minis or more, or something like that. Like Deadass, I have 250K fundeds, and I literally use 10 to 15 micros, so at most like a mini, maybe two, I guess if you're feeling crazy, but a mini is usually the max size I do on my own. How I do bigger size is when I start compounding accounts, so I've got 20 accounts, let's say, and I'm doing 10 minis per account, or 10 micros per account, I should say. So that's 200 micros. That's more than enough. But this is kind of my breakdown. 50K accounts. I do 3 to 5 micros max. Usually I risk about 20 to 40 points on my stop loss. I usually, and I'll show you where we find those later. But 3 to 5 micros, and then usually my take profit, I do 40 points. And that 20 to 40 points, those are my brackets I always set for myself. And that's what I stay consistent with no matter what the trade is. Um, Obviously, I adjust the internal and external liquidities as needed, but those are the ranges I kind of stick in. So 3 to 5 micros for 50K accounts, 5 to 10 for 100K accounts, 10 to 15 for 150K accounts. I have absolutely no idea why you'd need more than that, is where I'm at in my head. Like, I just don't know why you'd need more than that because 40 points on 10 micros is 800 bucks. I just don't know a job unless you're, doctor, consultant, some crazy super high paying job that you make more than 800 bucks a day. Like that's plenty. That's plenty. I don't see why you'd need more. And then again, if you need more, scale up to more accounts. Simple as that. The heavier you size, the bigger the loss hurts your account. And the whole kind of game with prop firms is to not lose your accounts. Because think about it. It's like 300 bucks all in to get a prop firm. If you can get 10, 20K of payouts in there, that's insane ROI, So that's the cheat code with these. And you can do that by making $200, $300 a day. 100%. So I've never understood why people feel like they need a size higher than that. So that's kind of my take on sizing. So again, 3 to 5 micros, 50K accounts, 5 to 10 on 100K accounts, 10 to 15 on 150s, and those are just micros. I never trade minis. I always just trade micros. Even if I'm going heavy size, I always trade micros. I'd rather have 5,000 micros than 500 minis. It makes more sense in my head. So Yusuf said, what are key levels are more value than others and how to recognize them. So TT did a class on this. This is a big deal. It's liquidity. So this I literally have no context about, but I can tell you that this impulse move down was either a news related or some sort of something that caused a drastic shift in the market change, right? So these highs, these two that I marked out, this one not as much, but these two are incredibly valuable, and I'll tell you why. So how news works and why things move so fast is because there is insane inflow of orders, like insane inflow of orders. So every single day, if you guys didn't know, there's about $2 to $5 trillion going in and out of the markets. On a move like this might be 1.5 or so trillion of those orders that took place. And so with that, a lot get left behind. A lot get left behind. And why these are so important is because those orders that got left behind, that's where price is going to want to draw to take care of them. Like it's simple as that. They want to take care of those. So in this exact chart, and again, I have no context. I have no idea what went on in June 2021. This is June 2021. I can't remember that far. I barely remember what I got for breakfast today, but these are the liquidities that you'd want to. Now, again, like this right here, sure, like that's not bad. Like that's internal. It matters. Don't get me wrong, but it doesn't matter as much as most people think it does. Like if you're just scalping, that'd be a great place to take some profits, but that's where you'd scale. You wouldn't fully sell for that. And main reason being is because that like there's probably orders left behind there, but it's all about the orders pool. It's all about where the volume's at in the market because that's where the market's gonna like magnet to. Like it's gonna just completely like suction cup to that price. And it's gonna always do it no matter what. And like things like gaps, like as you can see, like this gap it got rejected almost right at the middle. So it's respecting lower prices. But again, when it came down, and I have no idea how this price plays out, but if it doesn't clear this, it looks really good to push back up to these. And I'm gonna take a second look at chat. I want to make sure that makes sense to you guys. Okay, yeah, execution on small account. I'll do that one next because I feel like this one is my biggest deal. Yeah, yeah. Does that make sense to you guys? Hold on, clearance. So yeah, I use just higher time frame liquidity sweeps, so major liquidity sweeps plus an inverse fair value gap. That's all I use every single day. That's all I use. It's the only thing I look at. Like while I'm in the trade, I'll look at how things get affected by like order blocks and changing the state of deliveries and whatnot. But all I personally use for entries and exits are needs a sweep, needs a sweep, and then inverse fair value gap. So that's kind of yeah. So I'm glad that makes sense to you guys. Keep asking questions. Yeah, Yusuf, I say you have a question. If orders get left behind, wouldn't they be sell orders and thus push down price and price eventually goes back? So you can literally actually look at the order flow. You have to pay for it, unfortunately. But, we've got a couple people in the Discord that do look at these order flows. Like Swami is goaded at looking at these order flows. But no, it doesn't mean that at all. I mean, it kind of. But think about this, right? So everyone expected news to drop right here. Like I'm just gonna say this was FOMC. That's what I'm gonna say. Some sort of news event that everyone was watching for. These orders up here could be buys. Because I mean, think about it in like the long scheme of things. If it clears these, like the chances of it pushing higher are probably pretty high. Like especially with a 4 hour like this. Like then you'd want, let's say, oh, well, what just happened? Oopsie, my bad. But like you'd probably want something like these highs swept, right? Like and then from there you might want these highs swept. So it all just depends on the context. So um you're right, like some of them are probably sell orders, but a lot of them could be buy orders. Like you got to like that's why at least the way that I learned stocks, and I think a lot of people did too, things like those retail patterns that you looked at, like the flags, the double tops, the triple tops, those types of things, like they matter because of how much money is behind them. Like retail is a good, I think 20-25% of the total volume in the market. So it's like you can't just ignore them. Like you got to kind of at least acknowledge it. Now, what made sense for me was ICT basically simplified and showed me why those retail patterns matter. And so it's kind of all the same shit. They just trade off patterns and do it like a ooga booga instead of, like a real trader understanding what's going on. You know what I mean? So, um, anyways, that's kind of where, and then let me do one more thing before I move on, because I know people were asking about the take profit stop loss because it's kind of in the same spot. So you always want to have a reason why your stop loss and take profit are where they're at. So like for me, like if I were just looking at this basic and this is just what I was looking at, let's say I took a long right here, exactly where it is. This is where my stop would be, because if it goes below this, the odds of it bouncing right back up and doing its thing are incredibly low. Like you see it's rejecting this order block, and again, I have no context of this price, but it's rejecting this order block, it's holding it well. So if it does push up, I wouldn't even really want it to fail this order block, but at very worst, I wouldn't want it to sweep this. If it did, my whole trade idea is invalid completely. Like no ifs, ands, or buts. I'm not going to sit there try to chase it. I'm not going to do anything like that. It's just no ifs, ands, or buts. That's what it is. And then here is obviously like my ultimate take profit. That's like where I'd really like price to go, but I definitely would scale there, and I'd scale here, and I'd probably scale here as well. And some people, like I've gotten shit for this in the past, but like this and this, they're the 15 points, and people are like, well, why not just hold to that last one? It's like, why not secure more profits? Like people have never gone broke from taking profits. That's all I got to say. So yeah, I might make 50, 100, 200 bucks less, and maybe that's scaled on 20 accounts. Maybe it is a grand or two less, but I don't know. My situation, I only need like a couple grand a month to be floating. I don't need 100 grand a month. I feel like so many people come into the space thinking they need 10, 20, 30, 40, 50 grand a month because it's possible, but you don't need it. Like you don't need it at all. 5 grand a month, I think to everyone here, if you could consistently make five more grand a month through trading, I think that would change pretty much every single one of your lives. And you just got to keep it like that because yeah, you can go on Twitter, you can see all these motherfuckers making dumb racks, which just give them their props. That's awesome. but at the same time, you don't need to like copy them. Look at your own situation, look at what you need per month, and look at what you would like to make per month, and look at how much you can maximum like lose per month comfortably, and just adjust kind of what you really want from there, type of thing. Like that's the best way to look at it. I don't think there's really anything else that you should look at when it's going. But yeah, I did call you guys ooga boogas sometimes, but hey Bev, how much do you wait, do you guys ICT trader account for volume in your trades? A little bit. A little bit. The biggest thing I do look for is those macro times, right? Because macro times are when volume inflows, and that's where I look at volume the most. Do you guys understand macro times? Someone posted a chart of what it was early, like, ah, shit, it was a couple days ago. It definitely was a couple days ago. But so for me, I'm in Mountain Standard Time, so I'll just do it off East Coast time because that's kind of what, yeah, ICT kill zones kind of. So eight, uh, 8 for me, but 10 o'clock New York time is where a lot of that morning volumes get a flow in, and 2 o'clock New York time is where a lot of volumes get a flow in for PM session. So those are your AM and PM session inflows. Asia, 10 p.m. macros when volume will flow in. London is usually around 2 a.m. is when volume will flow in. So when it comes to volume, that's really what I mainly look at. But I also, when I'm trading, especially individual stocks and on options, I look at volume a lot more than futures. Um, but yeah, so I've always been confused if I should consider the close of the candle body or the wicks is my key level. So there's not a simple answer to that. Candle body is stronger, but wicks, there's a reason they're the wicks, so they also have orders placed at the top and bottom. So I think the way that ICT himself teaches it, I think it's like 0.1% within the liquidity is when it'll make sense, and like like if the liquidity essentially stops there, then you should look at taking profits. So I always go for wicks personally, but I do manage it actively. So it's like if I can see it's really slowing down before it wants to get to that top of the wick, it's like I will move my stops real close, and like if it hits my stops, it hits my stops, that's fine. But I do want it to sweep the wick. But like in this case, for example, right, like this wick, I marked out this 4 hour wick above it. Like I would ideally like it to sweep these and then keep pushing up. Like we'll probably see an instant reaction, but then push right back up, kind of thing. If that makes sense. If that makes sense. Like, I hope that helps kind of answer that. But with the past few days, with volume being slow, especially on non-red folder days, as a non-futures trader, would you say? Yeah. So that's another thing. I covered this last time, and I'm mad at myself because I streamed it and not recorded it, and I just double checked to make sure I was recording it this time. But um, you got to know when just not to trade. Like when there's like nothing showing up, you're just chopping around all day. Like don't even look at the chart. And if a move happens later in the day that you miss, so be it, bro. Like there's 252 days, trading days of the year. You'll catch a couple moves. Like look at Rob last week, dude. One trade the entire week, made 1,200 bucks. You know what I mean? Most people, that's a insane paycheck for him. If you can make 2,400 bucks every 2 weeks, like that's a really solid paycheck. You know what I mean? And he didn't touch the rest of the market the entire week besides the one time he took a trade. Like that's really how it should be. I'm honestly just a degenerate at heart, so I like to trade more than I probably should. But I've like got to the point after 5 years of doing this that even this, quote unquote trades I don't necessarily need to take, I at least have a good thesis for, and I can understand where my risk would be. And I always predetermine my risk and understand what my risk is. And what I mean by risk is how much you can maximum lose. You always have to look at every trade you take is how much you can maximum lose. Don't look at how much you can maximum make, because you're gonna be screwed and you're gonna fuck yourself mentally in the head if you're looking like, hey, I want to make 1,000 bucks today. Then you take your first trade, you lose, let's say 200 or 400. You're like, damn, now I need to make 1,400 a day because that's what I wanted to do, because I wanted to be up $1,000 today. Let's say you take a second loss. Now you're down 600, 800 on the day. Now you got to make 1,600, 1,800 to make your $1,000 that you wanted to. So it's like if you look at it like money, you're gonna fuck yourself like completely. You're just gonna fuck yourself. It's simple as that. Like, don't ever look at it as money. Look at it as quality trades. I would way rather put one micro and catch the actual full entire move that I expected with huge wide stops, be able to risk the same amount as like a little scalp in between with heavier sizing. You know what I mean? So it's just up to you. And then that's another thing I did want to hit on with sizing. So let's say like a move like this, right? Like I said, I look for 40 to 20 point trades. But here, let's say I entered at this FBG, that's 677 all the way up to 773. That's 100 points. You know what I mean? That off of 400, if I'm using 5 micros, that's $400 I'm only looking for. So I could do 3 micros there, right? That's why I have that range of micros. So you'd want to size down a little bit when you know your take profit's going to be a bit farther. Plus, on the flip side, your stop loss is going to be a bit lower. Because, when I'm looking for 400 max on a trade profit, I'm looking at 200. I always go for a 2 to 1, just predetermined. I always adjust as, I actively manage every one of my trades. So that's kind of where I always start it and I kind of base it off there. And from there, I figure it out. For funded accounts, I know that you keep risk consistent, but or can, it just depends on the account size. But what I was saying is kind of exactly in line. And boss, when you sent that question earlier, I think, the biggest thing I wanted to say on that is just your mindset should not change at all from your eval to your funded. I know if once you get to the point where you're consistently profitable and evals are kind of a waste of time, it is okay to, full send them, but it's because you got the bankroll behind you. If you blow them, it doesn't fucking matter, right? But your mindset shouldn't change at all. Your mindset shouldn't change at all, dude. Like it should be the exact same. Like I totally get that, now you're in a spot that whatever trade you take technically can make you money, that you get paid. But the biggest thing you need to understand is all of these prop firms, besides Take Profit, and this is why it's my favorite, but all of these prop firms require you to trade 5 days, like 5 to 10 days. You know what I mean? Like you got to trade a couple days. So whatever you do today is not like the end all be all. You know what I mean? Like if you lose $200 a day, like you still have 4 to 9 days to make up for it. So like it's all just a little drop in a big river. Yeah, no minimum days. Literally day one unfunded. As long as you get over the buffer, you can pull out a ton. You can pull out whatever you got. So that's the biggest thing I wanted to say about that is your mindset shouldn't change. Honestly, your sizing shouldn't change. But if you are oversizing on evals, I say stick to kind of what I was saying. And again, everything like trading is such a unique game. It's just all mental. So whatever works best for you, but that's what I'd recommend. Um, Behave-ish. I trade once or twice a day. 1 to 2 trades is really the max I want to take. But I do keep in my mind futures and options separate. So futures, I do 1 to 2, maybe 3 if it's a good day, max trades. But then options, I don't count that as one of my 1 to 3 trades type of thing. So 1 to 3 trades, really, to be honest, like Rob says all the time, dude, you don't need to trade every day, like at all. Yeah, yeah, no, and I get that because with it being $15, it's like, if it's $15, that's like a Chipotle bowl, bro. If you lose it, then whatever type thing. But at the same time, like I think for people, especially learning, treat it as if it's funded off rip and just have the exact same mindset. Don't let anything in your head change from the time you go forward. So, I'm gonna start going into. Hold up, I'm gonna just check chat real quick and just make sure.
Hey, Bev, real quick, one thing
Yeah, yeah.
I want to just interject on. So, this was something that I struggled with a lot, and I think it's kind of typical of new traders. But very early in my journey, it was like, you know, you're trading every little tiny thing you see, and you're really not considering your risk to reward. If you're trading more than, you know, 3, 4, 5 times a day, that I agree with you, that is a lot, right? You don't need to do that much, and in fact, most of the time, I'm sure you've had the same experience, Will, you'll be up on the day, and you'll just get that itch for one more, right?
Yep, yep.
9 out of 10 times, like, you just give money back, right?
Yeah.
So,
It's funny how it works, but
what
it's seriously, it's like,
right.
yeah.
What's really important more than the number of trades you take is the quality of trades that you take,
Yep.
and if you only identify 2R setups, right? So what that means when you hear us say 2R or 2 to 1, that means and use I would highly suggest you use the long and short tool. Like most 95% of people are using TradingView today, right?
Hmm.
And they have that great tool where you can literally draw where your entry would be, where your stop loss would be, and where your take profit would be, right? So if you consistently aim for 2R trades, like before you take a trade, you put that on your chart and you're not trading your P&L, which is why a lot of you have heard me say before, like, I think see profit, take profit is bullshit,
Hmm. Hmm.
right? Like, you either hold to where your price targets are or it hits your stop loss. Like, that should be the only outcome of your trade. And obviously, if you're in 0-day options and you're on something like SPX, like that changes a little bit. You obviously want to scale.
For sure.
But the point I'm trying to make here is that if you take a 2R trade, you enter a trade and you aim for 2-to-1 risk reward ratio, right? And you hold it down to your price target. You only have to be 33% correct
Yeah.
to be net profitable.
Hmm. No,
So
like,
the point I'm making here is that you don't like the more you just panic sell your position because you're up $200 or you're up 30%, like that's actually going to damage you more in the long run because if you just enter with a smaller amount and you hold to your 2R, you only have to be 33% right.
yeah. No,
And
like,
like I can post, like you can go to Chat GPT, I just plug this in, right? Like this is the math. 33.3%. I'll post it right in the main channel. Like you'll make money.
yeah.
In the over time, you'll be net green and you only need to be 33% right. And like you have to kind of be retarded to be 70% wrong. You know what I mean?
Yeah, 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 yeah. Like you have to just be clicking buttons. But like full
Right.
transparency, like last year I was like 42% was my win rate, but I made a ton of money. Like I did really well for myself last year, you know? So
Right.
like the biggest thing and like just to kind of add on to your point, it's like it's way more like 150% more about catching the move that you understand why it would move that way than just making the dollar or two that you want to make. You know what I mean? Like it, you will be 100 times more profitable trying to find the move that it's gonna make and understanding why it's gonna make that move than let's just say like sizing this chart for example, it's sizing heavy and just scalping up to here and making your $1,000 instead of sizing small and actually catching the right move, right? You know, like that will change everything for your trading. Don't even look at all at your P&L. Like me, I don't have my P&L open all day until I'm ready to log off for the day. And then I'll look at it, I'm like, I made that. That's good. Sweet. Or I lost that. That's good. Sweet. And then it's another day. Tomorrow's the next day type of thing. But yeah, no, dude, I freaking love that. And that's something you guys should all keep in mind. It's not about the money you make or lose per day. It's about if you understood why you took the trade you took. And if, you know, if you got stopped, if you like at least understanding why you would have got stopped, right? You know, like reflecting on every part of your trade. Journaling it is awesome. And Pern had a fucking awesome what's it called? Template for Notion that you guys should all use to journal if you guys aren't already journaling. Um, but yeah, exactly, Behavish. Exactly, dude. Like, size smaller. I promise. I already know because I see the screenshots in chat. Most of you guys are way oversized. Most of you guys are way, way oversized. And I'm not like talking down on you because trust me, the first like year I was in futures, I was doing the exact same shit, dude. I remember the first time I loaded up a personal futures account, I was just trading a mini, and once I was up $50, which is like fucking what, like a point, like a half point or something, I would just sell. You know what I mean? And I just did that like 100 times in a night. And yeah, it made a little bit of money, but it definitely wasn't sustainable. You know what I mean? So finding the actual move, understanding why the move happens, you're gonna love it. Like that's gonna be freaking 10 times better for everything about your trading. So yeah, I don't know if you had some more you want to add to that, but or if there's any other questions or anything like that, but yeah.
I'll answer Yusuf real quick, and then you could take back over. I'm not trying to, take over your stream.
Oh no, you're good.
Um, would that mean scaling your stop loss is a bad idea? Yes. So it's kind of twofold. So that happened when so I've been an options trader for a very long time. I have not traded futures for more than I think a year and a half, 2 years. I am relatively new to the futures game, but I would do that. I'm not sure if y'all heard of Desi. He's a fucking goated futures trader, and he kind of taught me a lot about it. When I first got into trading futures, I would do that a lot. Like I would get, you know, 10 or 15 points green, I would just move my stop loss to break even, like all the time. And then I would get wicked out. And with futures, it's a little bit different than like options. Like literally, a wick will come down, hit your stop, and you'll be out of the position. And then it could just get bought right back up. And as we kind of try to teach y'all about stop rate hunts, like that happens a lot. So really what you want to do is move your stop like on this chart that has up right now, right? Like if he's going to take this long, he would go break even only at that first internal liquidity level in case it runs up, like sweeps that little buy side, and then it like goes to new lows. So I would get into a bad habit where I would like, at first a little bit of expansion and I'd be, 10 or 15 points green. I'd go break even and then I'd get wicked out. So like what Desi told me is you have to let the trade breathe, especially with futures. Like you don't just arbitrarily go break even at your first price target. Like let's say you have like 3 or 4 micros, you take a couple, 1 or 2 contracts off at your first price target, and then you go break even. So that way, like time and time again, I would get wicked out and then it would keep running in the direction of the trade that I was in.
Mhm.
So yeah, you want to have, the whole point here is that you want to have a trade plan. You don't want to be trading your P&L. You don't want to take profit just because you're up 30% on your options contract, or you're up 10 or 15 points on an ES long. You know what I mean? Like, yeah, okay, I get no one ever went broke taking profit. But if you're holding to 2R, you're greatly increasing your returns. And that is lessening the amount you have to be right. If you're entering the market 100 times a week, and you're just taking 10 or 15 points or a couple of $100, like every time you participate in the market, you put on risk. So wouldn't it be better to take like higher quality setups, hold for a longer period of time, make more money out of smaller money than just take 20 or 30% and enter 100 times a week? Like it's much better to just hold the trade down and stick to the plan. But with that being said, I'll let you take it.
No, dude, 100%. I really couldn't have said that better myself. And then I did just want to add one more thing to that, actually. Because, I mentioned retail stuff earlier. And again, like that's where I started. Honestly, it's probably where you started too, TT. And most of us here, trading shit like bull flags, whatever, that type of stuff, which, again, they're valid technically. But one thing you really, really, really need to do if you're learning ICT and you're learning actually like why the market does what it does, don't pattern trade. You know what I mean? Like IFEGs happen a million times a day. Like let's go look at the 1 minute. There's probably like 50 just right here. Like I don't know. I guess it's fucking shit. But like like fair value gaps getting burst all the time. But you have to understand which ones to take, right? So like reason why I look for longs here is all this freaking internal liquidity got taken, and it looks like we're gonna not want to take these lows. So like I would start looking for an IFEG back up. Now that's just how I trade. I'm gonna put it onto CS or CISDs and OBs. Now like there's a ton of order blocks every day. There's a ton of change in the state of deliveries every single day too. Now you can get lucky, totally still make money off them, but you got to understand why you would want to take certain, change in the state of deliveries, certain IFEGs, certain order blocks over others. And really what that all boils down to is liquidity. Did it sweep a significant liquidity? Did it like would it make sense that this is where, price reverses or price continues? Like that's the bigger picture. Like yeah, technically an IFEG is a pattern if you want to look at it like that, but I'm not pattern trading it. It's not like I'm seeing every IFEG I can in the day and just taking those. Like I'm looking at the ones that will makes sense. You know what I mean? Like that would do the things I'd want it to do. That could be in a spot that gives me good risk to reward to shoot back to the draw and liquidity that I'm looking at. So just another thing, yeah, don't pattern trade. Don't ever pattern trade. Always make sure there's a liquidity sweep involved. And we'll go through that actually right here. So we'll go to 15-minute. Um, again, like this is technically what I would look at just based off of absolutely nothing in front of me, no context. This is 3 years ago. But let's play things out. I wouldn't take a long here. If I were to take a long, again, it would be, oh, not a fucking rotator rectangle, but it would be here. So we held this OB. That's what gives me signs and pushes for back to bullish. If we didn't, then I would look for these shorts, but we still might sweep those shorts. Let's just see. So if we inverse this 15-minute fair value gap, see like this shit's still holding the OB. We'll keep drawing this out. And like that's where things like ICT like really help you understand. Like people call them levels. A lot of people call them levels, which, it's essentially the same shit. It's just gives you more clarity of why it's a level. Um, but yeah, this order block's holding everything up. So let's just keep seeing. If it breaks and falls through, then it is what it is. But once we get an inversion, which what an inversion is, I don't know if I really ever explained it to you guys, but when a candle closes fully above a fair value gap and the body closes above, not the wick, the body. And once it does, to me, that's a good confluence that, hey, price was totally fine because price was totally fine to sweep back through it and keep pushing. And, a fair value gap in the first place is a price that everyone agreed on while it was trading. You know what I mean? That's why it gives me so much confluence because if it swept right back through it and everyone already agreed that that price at that moment made sense, it's like, okay, well, then they're also okay with price keep pushing this way. Like that's where my confluence goes, and that's why I use inverse fair value gaps. But that was very basic. There's a lot more reason to it, but yeah. So there we go. Let's just say we take this. I don't even think this is a great trade. This isn't like an A plus trade, but let's take two minis. And again, stop loss here. We'll draw it out for you guys. We'll take stop loss here, and this is where we are. So stop loss here and take profit. We'll target these 4-hour highs, and we'll show you those 4-hour highs again. These ones right here. And when they're large wicks like this, like that question you guys had earlier about wicks, um, yeah, wicks like these are a lot more valuable, a lot more important. But at the same time, like I said, ICT, which is who we learn pretty much all this stuff from, says that if you're within zero point 0.1 or whatever percent, then it's okay to take profit there. So really, we're gonna start take profit here. We're gonna sell one here at these local highs and then external highs. So we'll just see what happens. We'll just go back to the 15, lock back in, and we'll keep going. And came back and still love that OB. It's funny how OBs work, right? And, a lot of people mid trade would start shitting their pants there and probably panic sell. And again, for me, dude, it doesn't matter until it hits take profit or stop loss. So if we hit, there's stop loss. So I took a loss. That, in my mind, actively trading that's exactly how I process it. Okay, loss taken. You know what I mean? That's fine. And then, now that this swept, we would start looking at lower time or like, lower liquidities that might be big. So there's a huge 4-hour fair value gap right here. There's also liquidity down here. And, let's see how it reacts to this 4-hour. Fucking inversed it. So we'll sell two. Because again, I always look at inverses. Everyone here trades a little bit differently, but this is what I would do is I would take stops at the top of this 4-hour fair value gap, targets at this. Honestly, you could probably target lower, but that's where I would take profits. Oh shit. Whatever this is going crazy right now, dude. These are like fucking 200-point moves, but anyways, I don't ever trade off 4-hour shits. I normally just do 15, but yeah, this is a wonky ass June. And then look, it's funny, we just came up and swept all these highs, like I was saying kind of before. So identifying that draw on liquidity is always important. I know that was kind of a shit way to show you, right? Because I just took technically two L's. But yeah, from here you'd either wanted to see this again or retrace back to this 15-minute fair value gap. And let's see what it does. Beep, 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 beep. This is Asia session, you can tell. Fuck chop sesh. So there's your 4 hour taken now. Um, so then from there, right, then you like long story short, find your DOL, watch it play to that DOL or not, and then reevaluate. Simple as that. Just reevaluate. So look, now next highs would be all the way up here. Technically, you'd want like all this LRLRN, but yeah, like simple as that. So now let's see what happens. From here, now technically this is a swing low. So just real quick, I know I covered this last time, but swing lows, especially when it comes to higher time frame, which is in my opinion 4 hour or above. You can use hourlies, but I like 4 hours, just easier, better confluence in my opinion, in my experience. But a swing higher low, and I'll explain it for highs. Actually, I'll explain it for lows because there's a prime example right here. So why this is a swing low is the candle before its wick was nowhere near this bottom, and the candle after also wasn't near this bottom. So it's kind of like an unprotected low, right? Like since this happened, nothing's touched it. And that gives you more confluence on liquidities type of thing. Like if it hasn't been touched and it's a higher time frame, the odds of it getting touched are bigger. And we just barely saw this last week with I remember I was sending alerts out that we wanted to dive down to that 4 hour gap because there was that liquidity down there, that swing low, and we did. And then we bounced right back. So it's like finding and then, swing high is just the opposite of that. So, anyways, like right here, those are my two levels, or I guess three, if you want to call them levels, places of liquidity that I would be targeting. And we'll just see how shit plays out. Crazy wonky ass fucking price action here. Holy shit. It also looks like news. These are crazy candles. I don't know what was going on in 2021, bro, but these motherfuckers were on crack. Um, See, like right here. Let's just say like this is so similar to the setup I took this morning. Holy shit. Holy shit, actually. Let's just see if it plays out the same way. Because look, let's see. Is this okay, so this is like 2 p.m. macro. This whole dump. Once we inverse this and we swept internal liquidities, which is right here, right? Like I would put risk on for this all day. I would target, these highs obviously really up to here is the way, and then stops at internal lows. And let's just see. Looks like we're into Asia session now, so it's slowing the fuck down. Which, as you know, and you're probably seeing right now in Asia session, there's some craziness that goes on. There's random fucking 100+ point candles. But technically we're still. Oh, I didn't even buy it. Oh, whatever. We'll just buy here and we'll just see if it plays out. Just for just for documentation. We'll go 15 minutes on these so we can skip a little quicker. See what it looks. So you see where the draw is? Like it looks like it wants to push up. It really like this trade technically hasn't had much drawdown. Like in here you would have taken some trims up here. You would have wanted to take another one up here, but you didn't, and then just let it kind of ride. It's still chilling at basically even with gradual push upwards type of thing. So I'm gonna go to the 15 minute. We're gonna skip some more time here. We're gonna see how this plays out. Bro, this market was on crack. I can't believe I was trading this shit. But look, technically we got stopped out, but then the liquidities on both side fucking hit. You know what I mean? So it's like that's why we try to preach these draw on liquidities all the time because that's what the market does. It finds this next area it's gonna push to, which almost always is the wick of a certain higher low, and it's always usually a swing higher low. That's why this ICT concepts work so well. Um, but I don't know. So like here, yeah, technically we would have got stopped. But again, I marked this swing low as the actual liquidity. So realistically, like if you were to look at this as just a fucking standpoint of like, hey, like where's the market going throughout this next week? We would have been right. Like if it would have went under here, totally invalid. But I was using internals. And like I get this is something I'm still working on personally, is I like to keep my stops kind of as manageable and as tight as possible because, I'd rather not take losses. I think that we can all agree there, right? But you got to understand what the actual like if it broke this, that's way bigger of a deal than breaking this, right? Because look, this one it just swept and fucking shot up from there. So I know I'm on a stinker on this FX replay right now, but like, does that make sense to you guys? And then it looks like we're just gonna keep pushing up. There's this other 4 hour liquidity up here. Almost guarantee that's what comes next. So this will be your swing low of this, range, which you always got to look at it at ranges, right? Because like this whole section of price is like a day or two of price. And price moves a lot every day, even if it's overnight, whether it's New York, whatever session it is per day. I've been doing this 5 years. I've never seen a day where price just doesn't do anything from the minute Asia opens to the minute New York closes. Like price is gonna do something every day. It's got an objective every single day. So now here would be our next wash or here. And they're all just swing lows and highs. That's all they are. So, things are looking like it's holding up here and accumulating up here. We're probably gonna go sweep these 4 hour highs. Probably. But apparently 2021 markets were on crack, bro. I don't understand. But there's that 4 hour high. And then if I remember right, this is all-time highs. Now, I don't care what anyone says, all-time highs are the hardest trading conditions ever. Because again, I always mark out my draw on liquidities and go from there. And I always reconvene and just like let shit happen. Like the odds of shit just jumping from here are pretty high, but we probably get a retracement like that. But then we just probably keep going. Like all-time highs are hard because it's like what can you look to the upside for? You know what I mean? Like that's where psych levels come in, which are usually like flat hundreds, flat thousands, like 14,000, right? Or 15,000. Like watch, let's see if we can play it out enough that we hit 15,000 and just see what price does there. Oh, fuck. Well, it didn't do it, but like all-time highs are a very, very tough time to trade. And to be honest, like within the next few months, we might be there. And if we are, we're all be in this together. Like last year, I got lucky and did pretty well with all-time high trading. But yeah, you never know. Um, yeah, I guess that's kind of more or less the replay. Um, Analytics, I traded like Pookie. I don't even think I got 33%. Don't compare this to what TT just sent because I was taking fat losses and I took like one small dub. So yeah. Anyways, Daddy, let's do it. Let's check it out, my MSTR and Bitcoin. Let's check them out. I haven't looked at Bitcoin in a while, to be honest. Let's go 4 hour. Um, Depending on how this closed, we probably technically get a 4 hour change of the state of delivery. This fair value gap will be telling for sure. Because if we inverse this, we're fucking cleared again to all-time highs, in my opinion. Um, but I know the sentiment around Bitcoin's more or less been a little bearish. Uh, there's not a lot of reasons why though. But I do like how we held this order block right here. We rejected it pretty fucking fat. Um, we also swept internal liquidities here. Like this does look good to upside. And then if we're doing MSTR, it's basically the same chart. So I mean, yeah, it looks good to upside. It just like again, I wouldn't touch it until it touches this 4 hour gap, and I would see what happens here. And if we inverse it, all-time highs cleared for sure. I feel like, and then you'd want your stops down here, type of thing. But I don't know. Well, let's look at weekly. I mean, hell, hard to be bearish on that. Yeah, like it looks like this is really basically just a little retracement and correction because look, we came and swept previous all-time highs, a little retracement, it came down into this range here, held it really well, and it looks like we're starting to push back up. Again, it's prediction at that point, which is never ideal. Um, but yeah, I guess you could use this daily gap too and see. Look, we're in it right now. So shit, I don't know. Yeah, technically, I guess we did get a daily change in the state of delivery. Daily looks good. Daily looks even better. So however this day close will tell a lot. That'll tell a lot. I'll do some CRM real quick, and then I'm gonna hop off here in about 10 minutes or so. So CRM, some Salesforce. Jim Cramer just talked about it, so it's going to zero. But I don't know. I don't think I'd touch this. I wouldn't touch this. Yeah, I wouldn't touch this. I know like long term this is a great stock to hold. Like add it to your Roth for sure, and in 10 years you'll be stoked. But there's nothing. Let's see what this monthly looks like. I mean, I guess it's holding this monthly order block, but like month just started too, so we'd want to see how this whole month plays out, type of thing. But yeah, I wouldn't touch this really. PLTR, is this at 2000 yet, or like how's it looking? Look at that monthly, dude. You know what's crazy is Swami caught from like
Batman, the dude in this server, he's the one who bought like 1,500 shares at $9.
someone here.
And
Oh,
then,
the guy that just said PLTR.
no, Batman, the
Oh
marketing
shit.
guy, he bought like 1,500 shares at $9 and has held it down the whole time. The only shares that he sold is it was getting to be like, yeah, it's like a fucking 130 plus $1,000 position.
Yeah, yeah.
So he gave 500 of them to a financial advisor that he knew
Oh, nice.
because I kept telling him like sell calls against it, dude, like collect some premium at least.
True.
And the financial advisor, the first thing he did was he put RSI on the chart,
Oh
and he's like,
hell no.
it's getting very overbought, and he sold like monthly 95 calls into earnings when it was like
No.
$80. So needless to
No.
say, I think now he's only got like 1,000.
Well, either way, dude, he's fucking paid. I don't know if you saw Swami do that last year, but he caught. I think it was like
Yeah,
10,000% or some shit, dude. It was ridiculous. But
yeah,
as for
ridiculous.
analysis, as of right now, we just swept internal 4-hour highs. It looks like we might retrace a little bit. There's nothing clear here. There's really not much clear here, to be honest. I wouldn't touch it. It's one of those. It's like instead of trying to catch a falling knife with stocks that are just plummeting, it's like trying to catch a rocket on its way to the moon. But you never know how when it needs to turn back to grab some gas or something. So I don't know. Something tells me it'll be chopping pretty chill for a year or two on PLTR. I think so, but I could totally be wrong. I'm wrong all the time. I'm wrong a lot. Oh yeah, 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 Cram. Yes, yeah. And a couple other people asked about this. Small accounts. Dude, right now my options portion is full transparency is like 3 grand, for on Robinhood. So huge thing, dude. Just keep it light. Just keep it light. Like for example, those QQQ calls I bought. I bought three. So I was at about $1,000. Yeah, it's more leverage than I think I would suggest to you guys. With the confluence I had and the risks that I was willing to accept, like basically I was cool to take like a $300, $400 loss if it happened. But luckily we were able to scale out, and I still got a runner. We're doing good. But biggest thing is no matter what your size account is, do not, never ever risk more than you're willing to lose. Simple as that, really. Like just don't risk more than you're willing to lose. Like you got 1,000. If you think about it, like if I lost 250 right now, would that like fucking suck to trade a $750 account? Like probably, like probably it would definitely like be harder. So maybe just risk 100, because a $900 account and a $750 account are a lot different, like a lot different, like one thing I learned early on, and it's kind of embedded in my brain, and I think it's just the way that I think about it. But just look at blah, blah, can't even talk. Look at it as percentages, you know. So like, I think 2 to 5% maximum on a small account is what you should be risking. That's what I think. You know, maybe 10 if it's you want to be aggressive about it, but look at it at percentages. Is just try to keep it. It's all about risk, I guess, with small accounts. You know, like try to find good snipes so you can build good buffers, and especially on things like options. You know, like we were talking about, don't just take profit to take profit, but while your account's at like 500 to $1,000, like it is really hard to make that a sizable amount of money. So take the profit there. Like take the profit there. You know what I mean? Like take anything you can almost get there. But at the same time, if you catch the right trade, that fucking $1,000 account can turn into 2,000 off one if you get a multiple 1,000% mover. So I don't know. As a Tesla, fuck, she looks good. We're right in the middle of this monthly fair value gap. How's the weekly look? Of course, dude. And I'll add a couple more thoughts to that too. Um, I think a big thing also is you have to understand and think about your small account as if, I don't know, I guess it's just tough because it's scenario to scenario, right? Like to some people, like $500 to put into an account to be able to trade options or with or whatever it is a lot, and it's a very sizable amount. But I think to most, it's not a make or break. Like it's not going to make you go bankrupt or something. So I think it does make people want to be a bit more aggressive. But I think it also, in my opinion, leaves you in a spot that is like really, really, really good to learn proper risk management. Because like you almost can't afford the losses when you're at that small of an account. Like if you take a loss that you were sized too heavy for, like most of the time your account's fucked. You know what I mean? Like you don't really have much to bounce back from. So it's really good in that aspect. And like I don't know, again, you see all these people making thousands of dollars a day, right? And so you want to try to replicate that. But let's say you have a $200 account. Like I've taken multiple $100 accounts to 1,000 plus, and like it's just it doesn't like it didn't like nothing in my mindset changed, right? Like I wasn't going for full ports, like I wasn't going for anything like that. Like it was simply just like if I made $10, that's a 10% gain on that whole account. You know what I mean? Yeah, it seems so insignificant because it's $10. That's like one Chipotle bowl, right? But you do that over a month and you do 5 to 10% gain per day. Like, holy shit, it adds up a lot. You guys understand compound interest. You've been in this space long enough to understand that. Um, just I don't know, like eh, and I think it goes to all trading, but have goals, like have goals, but don't like make those goals make or break and make like, you trade certain types of way because of it. So I don't know, like let's say 5% is your quote unquote goal, but let's say you get to 2%. That and you don't want to put any more risk on because there's nothing else. Like again, like always identify your market conditions, and if nothing looks very clear for the rest of the day, just log out. It's good. You're good. You made 2%. That's more than negative. That's more than zero. So it's just the biggest thing is it is tough because I totally get it on small accounts. Like when you take bigger losses, like that shit is very demoralizing and super unmotivating. But at the same time, it's like, don't let it be. Still look at what you got. Like let's say you're at a 2K account and you go to like 1,500. 1,500 is still enough to turn into a lot. Like last year, I'll be honest, I got to a point where my port was at 8,000 and I turned that into like 650. But like that was because of two really fucking fat trades. And if I didn't take those two trades throughout the year, I probably would have been down like 30K or so, which was no bueno, no bueno. Like I was just getting absolutely demolished on certain things. But, like my mindset didn't change throughout all of it. So it is an up and down game. But the biggest thing, I got taught this really, really early on is trading shouldn't fuck with your emotions. And if it does, number one, you're either size too high, or number two, you mentally may not just be able to handle the stress. Because I'll be honest, it's a fucking stressful ass thing to do. Like it is, it can be, like especially if you're depending on your income from trading. That's why we always, always push people to keep a day job. You know what I mean? Like use this as a source of secondary income. Because if you're using this as your everyday income and you go on a losing month, like you're out money from what you lost, plus, let's say you bought prop firms or whatever, and then you got nothing else to show for it, you didn't get a payout or whatever. So, yeah, I always look at this as a secondary income. Like I don't make shit for my job now. Like this is what does make me money, but at the same time, like I've got something to fall back on. I know bills will be paid regardless, because of the job I have, type of thing. So, yeah, I don't know. I hope that helped a little bit. And then Tesla, real quick. Yeah, I don't know. Honestly, TT, you might have a better analysis of Tesla. I haven't been watching it a whole lot. It does look bullish relatively, but
Hmm.
I don't
The
know.
only thing that worries me about Tesla right now is we lost. There's a bit of a 4 hour. Like I guess it's kind of still in the daily volume imbalance, but we closed under the 4 hour volume imbalance. There is it's just kind of in a shitty spot because there's a bullish fair value gap there. You're gonna run into the 4 hour order block. What I would say is if it reclaims, like I wouldn't want to touch it honestly until we get back over the BPR. Like there's a 4 hour balance price range, and then there's going to be a bearish order block just above that. Like if you get a 4 hour close over that, then just fucking long and walk away. Like take monthly 450s
Yeah,
and just walk away.
let it ride all the way back
But
to these highs. Yeah, for sure.
yeah, but right now it's kind of in a choppy spot because if
Yeah,
you look at the 4 hour, like it sold under the volume imbalance that I posted on the watch list, but then it caught that little 4 hour order block and came back up and it stopped right at the CE of that volume imbalance.
right.
I can post it in chat or in
Well, then to add to that, I just wanted to say also this daily range,
mhm.
this move down, we're right at the 50%, which is always just very low
Yeah,
probability.
suspect.
Yeah,
Yeah.
because you never know what it can do from here. Like, yeah, if it
Right.
rips up,
Is it gonna sell back? It's at equilibrium, right? So
yeah,
is it gonna sell down? Like, is this where bears are gonna get on it because it's in equilibrium of the dealing range? Or is it gonna consolidate and create like a accumulation phase? I would be hands off on it, honestly, for right now. I mean, I thought we'd see better selling pressure when we lost the because if you look at the weekly, the reason for the sell on Friday was the bearish fair value gap. Like we swept
yeah.
that little internal high, and then we sold off that. So that was the high of last week because of that.
Hmm.
So I don't know if it's time to long it, but then the fact that we didn't go down and squirt like more internal sell side makes me think that it is entirely possible it just goes sideways before it manipulates down. And that's what I'd want to see. Like some accumulation in this phase and then a manipulation leg down and then a place to get long.
I would definitely take a little something like this if we inverse this weekly, something
Or that. Yeah, that's
like
another
that or
option too.
some sort of something, yeah. Like it does look bullish and I'm bullish on Tesla as fuck long term for sure. Like buy shares
Yeah, same.
regardless of what you're doing, but yeah, I don't know. Yeah, it's not in a great spot. Normally and that's a good thing to always look at with basically anything you're looking at. If it's in the 50% of a range, which I hope that range right there is easy for you guys to identify. It's just a high to low of what this move is right here. Like basically forget everything that happened before this move on its own. When it's right at the 50%, it's really low probability. It's almost like you shouldn't look at it. You can, but
Yes.
you shouldn't really. But yeah, if there's any more questions, I'll stick around for a little bit longer. But I don't know if there's anything else I really wanted to cover today. I'm gonna stop the recording for now.